Hi everyone, this is Alice. I'm in my second year of university studying finance. Some of my financial goals would be to hit financial freedom by the age of 30, as well as achieving an annual return rate of 30%. Although it doesn't sound very realistic as of right now, it's very good to have dreams. I started this channel as a way of tracking my progress, as well as hopefully being able to teach people what I've learned along my journey. And speaking of which, on this channel I will be talking about some of my financial progress, what I did, and some of my way of thinking, and overall just what I'm doing to achieve my goals. Also, I'll be discussing the CFA test, obviously, and some of the progress and some of the major questions. And in my account that I just started, I put 50,000 USD to start my journey. For new investors, investing in an index fund ETF is a reliable and safe option. Take the QQQ as an example. This ETF follows and tracks the performance of the Nasdaq 100 index, which is composed of the 100 largest companies on the Nasdaq market. This includes major tech companies such as Apple, Microsoft, Amazon, and Google. By investing in QQQ, we can explore all of the stock performances in the index, therefore diversifying our investments. Since most of the companies in the Nasdaq 100 is tech-focused, the QQQ is considered a really good option in a portfolio that is pursuing growth in the tech sector. In the last 30 years, the average annual return rate is around 13.75%. Another example of an index ETF would be the SPY, which tracks the performance of the S&P 500. The S&P 500 index is a stock index that includes 500 of the largest U.S. companies, covering approximately 80% of the market capitalization of the U.S. stock market. The S&P 500 index covers companies in all various industries, so it's considered one of the most important indicators to measure the overall performance of the U.S. stock markets. SPY is traded and invested in a similar way to individual stocks, but instead of focusing on one company, it focuses on tracking the investment of the entire S&P 500 index. As such, SPY is one of the most common choices for investors looking to diversify widely in the U.S. stock market. The average annual return rate for SPY is 9.93% over the last 30 years. Dow Jones is also a very low-risk, low-return ETF. The Dow Jones Index is made up of 30 of the largest companies in the U.S., representing different industries and sectors of the U.S. economy. They include some of the long-established and well-known companies such as Apple, Microsoft, Boeing, Coca-Cola. Dow Jones is also a very low-risk, low-return ETF. The Dow Jones Index is made up of 30 of the largest companies in the U.S., representing different industries and sectors of the U.S. economy. They include some of the largest and most established companies such as Apple, Microsoft, Coca-Cola, and others. The average annual return rate is similar to SPY, with a return rate of 9.9% over the last 30 years. Among QQQ, SPY, and Dow, I actually prefer to invest in big technologies. Investing in big tech in today's market has many advantages. For example, high growth potential. Big tech companies are usually at the forefront of technological innovation, which is continuously launching new products and services. Due to their innovation capabilities and market leadership, these companies have high growth potential and can achieve rapid growth in a very short amount of time. Global market influence. Big tech companies have extensive market share and influence around the world. These companies are able to benefit from the growth of the global market as digitalization continues to advance across the globe. Stable cash flow. Some big tech companies have huge user bases and consistent cash flow. This makes them more resilient to market volatility. Technological monopoly and barriers. Some big tech companies have built very strong barriers and brand recognition, making it very difficult for competitors to enter their market segments. This monopoly position brings stable income and high profitability to the company. Diversified investment. Investment in big technological companies can realize diversified investment in different industries and fields. Big tech companies cover many different business areas, including hardware, software, cloud computing, and artificial intelligence. So investors can gain broad industry coverage by investing in big tech companies. Investment transparency. Big tech companies usually publicly disclose their financial status and operations to the public, which provides investors with more information and transparency, making investment decisions more reliable and clear. I plan to learn to use the options strategies to invest. This allows me to get higher returns with lower risk. In the coming year, I will mainly focus on and track the financial status as well as the price fluctuations of tech giants such as Tesla, Apple, Amazon, and Nvidia. I hope these companies can help me achieve my investment goals in a year.